Welcome to Crypto Alpha Edge, your daily crypto market recap 2025. Today's briefing is structured across key themes to help you stay informed and ahead of the market. Market overview. Bitcoin has been trading within a tightening range between $103,000 and $104,500 after peaking near $111,000 just days ago. The consolidation signals a potential reaccumulation phase. Analysts note that historical BTC market cycles often feature such pauses before the next move, either a breakout continuation or a correction. Key resistance remains in the $110,000 to $111,000 zone. If bulls regain strength, a retest of that level could open the door toward $115,000. On the downside, $100,000 remains a psychological support, with lower support around $92,000 to $94,000 in the event of broader risk-off sentiment. The broader crypto market cap is holding above $3.3 trillion, and total 24-hour trading volume remains healthy at around $90 billion, reflecting sustained investor activity across major exchanges. Ethereum momentum. Ethereum continues to show impressive strength, trading in the $2,500 to $2,650 range. Over the past 30 days, ETH has gained approximately 46%, outperforming most altcoins, and doing so with notably low volatility. This surge has been driven by persistent institutional interest, particularly surrounding spot ETH ETFs, which continue to see consistent inflows for nearly 2 weeks. Unlike speculative rallies, this move is backed by strong on-chain fundamentals. ETH staking rates are climbing, and active addresses remain above their 90-day average. Analysts at Bernstein suggest that ETH is emerging as the institutional tech layer bet, similar to how AI is framed in equities. As smart contract activity and L2 adoption grow, Ethereum's monetary premium is strengthening. Institutional movements K-Wave Media, a South Korean K-pop conglomerate listed on NASDAQ, announced plans to raise $500 million in capital to purchase Bitcoin for its treasury. This sparked a stunning 130% rally in the company's stock, showing how Wall Street is rewarding crypto-positive treasuries. It reflects a broader trend, companies seeking to hedge macro uncertainty with BTC exposure. Notably, the firm cited Bitcoin's scarcity and geopolitical independence as strategic factors. Webis International, a Chinese travel tech firm, filed documents with the US SEC proposing the creation of a $300 million XRP Treasury reserve. In contrast to Bitcoin-focused moves, Webis is opting for Ripple's network, signaling interest in transactional utility and low-cost settlements, particularly for international operations. This could be a blueprint for how APAC corporations adopt stable, fast-layer protocols over volatile store-of-value assets. Semler Scientific, a US-based medical diagnostics company, added $20 million more in BTC to its corporate treasury. The company now holds 4,449 Bitcoin, more than many publicly traded crypto firms, reinforcing the trend of non-crypto companies hedging balance sheets via digital assets. JPMorgan, one of the world's largest financial institutions, is reportedly offering financing for clients holding Bitcoin ETF shares, including BlackRock's iBet and Fidelity's FBTC. Additionally, they are exploring the use of crypto as loan collateral, a move that could significantly expand institutional access to digital asset leverage and liquidity. This is a watershed moment, a traditional banking titan aligning its lending model with tokenized instruments. Regulatory developments. MoonPay, a leading crypto on-ramp provider, has secured both a BIT license and money transmitter license in New York, arguably the toughest U.S. jurisdiction for crypto compliance. This unlocks its access to all 50 U.S. states, enabling seamless fiat-to-crypto services for U.S. users and potentially accelerating NFT and Web3 adoption via compliant channels. The U.S. Department of Justice has taken down 145 domains connected to the dark web marketplace, Biden Cash. Authorities seized a significant but undisclosed amount of crypto tied to the sale of stolen credit card data. This underscores Washington's increasing grip on crypto-facilitated cybercrime and the collaborative monitoring between FBI, IRS, CI, and blockchain analytics firms. Market sentiment and risks. Long-term Bitcoin holders, often dubbed whales, have been steadily decreasing their holdings, with the largest wallets showing a 40% reduction since 2016. While newer institutions are entering the space, this behavior historically marks the late stages of a bullish macro cycle. Glassnode data also indicates a rise in exchange deposits, a potential sign that some investors are preparing to lock in profits. Caution is warranted as we approach major resistance levels and overheated sentiment. Final thoughts. The crypto market is riding a wave of institutional adoption, ETF tailwinds, and regulatory progress. But as valuations climb and large holders scale back exposure, markets could face critical tests of conviction and liquidity. Strategically, analysts recommend balancing risk with positioning, watching for support retests, rotation into ETH, and volatility among top altcoins. This has been your daily institutional-grade crypto briefing from Crypto Alpha Edge. Stay sharp, stay early, stay informed.